Think it's impossible to save on taxes and get your dream home when you're self-employed? Think again. I'm going to go over a strategy that will blow your mind and make you think about how you buy real estate going forward. Follow along as I explain this game changer for those self-employed out there. Welcome to the world where paying less taxes and owning real estate, a primary or even an investment, isn't just a fantasy. It's your new reality. You probably think it's impossible to have the best of both worlds. Well, my name is Darin Hunter, and today we're tearing down the myths and unlocking the powerful strategies for the self-employed. Stay tuned because what you're about to learn could change your financial strategy forever. Imagine slashing your tax bill and holding the keys to your dream home. Sound too good to be true? Well, buckle up. I'm about to show you how financially savvy self-employed individuals are doing just that, using strategies most of you probably never even knew existed, or maybe you heard of it but didn't quite understand the concept and why it's actually so important. If you have heard of this, you may have been scared off by your misunderstanding. First of all, let's set the stage. You're self-employed, thriving in your business, but when it comes to taxes and buying a home, you feel stuck. You want to minimize your taxes, but you also want to accomplish the dream of owning a home. Traditional advice says, show more income on your tax returns. But wait, doesn't that mean paying more taxes? Yeah, absolutely it does. But here's where the magic happens. Enter the world of alternative mortgage options. Forget the traditional path. It's time for a smarter approach. Have you heard of bank statement loans? Yes or no? I'm willing to bet you don't fully understand why this product is vital to the self-employed. The gist, this gem lets you show your true financial strength without inflating your taxable income. Pay less in taxes and obtain the buying power you deserve. It's intriguing, isn't it? Typically, your net profits and officer compensation after adding back certain expenses like depreciation form the basis of your mortgage income calculation. Net profits and officer compensations flow into your personal tax return. They determine your AGI, or your adjusted gross income. This is what you are taxed on. It determines what your tax bracket is and ultimately what you owe the IRS or what refund you're getting. But here's where it gets interesting. You're aiming to buy a house, so you get with me or my team and they tell you you need to show an additional $150,000 in net income for 2023 instead of the $45,000 that you showed in 2022 to boost your mortgage eligibility to buy a house in 2024. But hey, wait a second, higher tax bracket. You jump from a 22 to a 24, and even though it's a small 2% jump, it may seem trivial, but it's on higher income. Your tax liability skyrockets. Suddenly, you're parting with a hefty chunk of your hard-earned money to the IRS. Not necessarily an ideal situation. I'm here to tell you there is a way around it, a path less traveled, if you will, and certainly more rewarding. The business bank statement or personal bank statement, for those that like to commingle, product is your golden ticket. It lets you use your business revenue for the last 12 or 24 months to qualify for a mortgage without inflating your taxable income. It's absolutely genius, and here's why. This approach not only boosts your buying power, but it also aligns perfectly with your goal to minimize your taxes. And the best part, the money you save from not paying extra taxes can go towards a larger down payment. You're investing in yourself, in an appreciating asset, and possibly even unlocking more tax benefits. Now, let's talk about the elephant in the room. The higher interest rates are there. There's no doubt about it. These loans often come with rates 1% to 2% higher than conventional loans. But let's put this into perspective. Would you rather pay the IRS tens of thousands of dollars with no tangible benefit, or invest that money in your own home? Picture this. You choose to go the traditional route. You just can't wrap your mind around that higher interest rate. So let's use the example from earlier. You were showing $45,000 in 2022. Now you need to show $150,000 in 2023. You increase your income on paper, enter higher tax bracket. You go from 22 to 24 and say goodbye to $36,000 in taxes. Or you can opt in for a bank statement product, use that $36,000 for a down payment, and own a home that appreciates in value along with amortization gains as you pay down that mortgage. Now, I mentioned the elevated rate. Yes, you will pay more on a monthly compared to a traditional rate, but compared to setting up an IRS payment plan or just simply writing a check that goes directly to the IRS just for the mere privilege of being successful, doesn't really sound that attractive to me. If you go the traditional route, you will have to prove that you paid the taxes or set up a payment plan and have made 3 consecutive payment plans before you're eligible for approval. Now listen, I am not a CPA, and there's no doubt about it. It's much more complex than this. This was a very simplistic example, but after 2 decades in this field, I've seen these strategies work wonders. It's all about understanding your options and making informed decisions. And remember, every financial situation is unique. You're different than this person. I'm different than you. So consulting with a tax professional is always a smart move, but I implore you to speak with a mortgage professional too, especially if you have a goal of owning real estate. Hopefully, we live in a place where CPA and accountants can live in harmony with mortgage professionals and not be the arch enemies that so many are today. Please reach out and talk to my team directly. If it's not us and you need a referral, please let me know. I've got contacts all over the country. If you're finding this information helpful, hit that like button and subscribe for more insider tips. And don't forget to share your thoughts in the comments below. Have you tried any of these strategies? Let's create a community of empowered, financially savvy, self-employed individuals. So we talked about the strategies, but let's actually define what self-employed individuals are. If you have a business entity and you file a separate tax return, there is a high probability that you are self-employed. Maybe you get a payroll check and a W-2 from that business you own and thought you have it set up to avoid having to show your business returns on the advice of your accountant or your CPA. Well, you still need to show those returns if you own over 20% of the business. How do you know if you own 20% or more? If you're not aware, you will get what's called a K-1 from your business return that will carry over net income or loss to your personal return. This document will read the exact amount of ownership. What if you work for a business and don't have any ownership in the company, but they pay you a check every single month or every single week, but they actually issue a 1099 at the end of the year? You are considered a contract employee. You may file a separate tax return, but there's probably likely that you file a Schedule C within your personal tax return. This is not a separate return. This is a schedule, again, that's filed within your personal tax returns. You write off marketing, your car, and other business expenses. You are, in fact, considered self-employed. In the mortgage world, you are absolutely self-employed. You too can take advantage of this program and get your buying power up if you're a 1099 or a contract employee. Again, reach out to me. I'm happy to answer any sort of questions. Are you ready to take control of your financial destiny? Start by exploring these alternative mortgage options. Dive into the business finances and look for opportunities to maximize your tax efficiency. And most importantly, do not be afraid to seek expert advice. Reach out to an accountant, reach out to a CPA, reach out to a mortgage professional. But when it comes to taxes, you need to speak with a professional. As we wrap up, remember, being self-employed doesn't mean sacrificing your dreams of home ownership or paying this ridiculous amount of taxes to the IRS. With the right strategies, you can have the best of both worlds. It's all about being informed, proactive, and a little bit creative. So what's going to be your next move? Do you continue down the traditional path, pay a little bit more in taxes, or are you ready to explore the alternative options designed to do exactly what I described, giving you the buying power you and your company deserve? The choice is yours, of course, and the future is bright for those who dare to think a little bit differently. Thank you for joining me on this bank statement discussion. If you enjoyed this video, share it with your fellow self-employed friends and help spread the knowledge. Stay tuned for more content that will transform your financial perspective. Don't forget to like, subscribe, and hit that notification bell for more life-changing financial insight. Until next time, this is Darin Hunter signing off. Keep thriving, keep dreaming, and keep reinventing your financial future. It's another guaranteed message. Have a great day.